Business ownership is one of the best ways to generate wealth and create financial freedom for you and your family. Welcome to the Aquila Wealth Podcast. Listen in as we tackle the challenges of entrepreneurship and share how to remove financial procrastination and find freedom from financial stress. Your host is Eric Maldonado, founder of Aquila Wealth Advisors, LLC in San Luis Obispo, California. Here's Eric.
You're a solopreneur creative. What's better, investing in your business or investing in the stock market? So first, what's a solopreneur creative? Someone that's a business owner and, they run the business, owner, operate it. And in the creative space, graphic designer, creative director, production, design of some sort, media, any of that stuff. And you're working hard, you're bringing on great clients, creating good income. And then you find yourself wondering, is it better to invest in my business or is it better to invest in the stock market? That's just one way to frame it. And really any business owner is thinking this all the time, where to outlay capital, where to put profit, where to redirect income that's coming in above and beyond expenses in the business. Hopefully that's the case for any business, profitable business that gets to the point where there's extra, there's margin, and then where to put it. Is it better to reinvest in the business or invest in something else? That's a constant dilemma or tension for any business owner. I'm using the solopreneur creative in this example, someone who, has a family and they're running the business and they're working hard. And it's in some kind of a creative space of marketing or design or in that avenue, just to narrow down the scope a little bit. So let's look at it. Investing in the stock market versus investing in your business. What are some things to think about, some things to consider? First, just framing it like that in general is a good idea to do the thought experiment. What is a better use of my money if you're a business owner? So one thing to think about is just having your stats, your information, your data lined up properly. So looking at, the growth rate of your business, that's something that any business owner should look at. And one of the fastest or best ways to do that is just be comparing gross revenue, profit, both those numbers are good, to last year and previous years. So if you've been in business for, 5, 6, 7 years, it's a good idea to be looking at the difference in revenue each year and having even an average. Like if someone were to ask you what's your average growth rate in your business, you don't have to tell them obviously, but being able to know that in your mind versus having no idea how the business has grown and if your profit is increasing or decreasing. So you would just look on your profit and loss statement and see gross revenue. You can look if you have cost of goods sold. You can look at net of that, but kind of a top line number of sales. What's coming in each year? Is it more or less than the year before? And then as a percentage compared to last year, am I growing at 10%, 20%, 30%? And then how does that year compare to the previous years? Is that an outlier or is that pretty consistent? Is there consistent increase of sales or revenue coming in where you can start to develop some sort of a comparison to the stock market? Stock market, quote unquote, stock market could mean any number of things because there's tons of different companies to invest in, indexes, there's exchange traded funds, mutual funds, alternative categories or classifications like commodities, even digital assets. So for this example, we'll just call it the S&P 500, the 500 largest companies in America. And historically, going back 100, 200 years even, it's been about 10%, give or take, of an annual return. Net of inflation, so if you take out the erosion of purchasing power, the fact that the dollar purchases less each year and prices rise, So a real return is probably more like 7% in the stock market or the S&P 500, investing in owning companies, the largest ones in America that tend to pay a dividend and things like that. So that alone is kind of a good benchmark or vantage point to have in comparing and understanding, okay, what if I were to redirect money in my business and put it into something like the stock market, what's the comparison of return I can expect if I, invest wisely and exhibit good behavior and stay the course and all those types of things. So just to use a random example, if your business is growing 10, 20, 25% per year, and you compare that to the stock market of 10% or the S&P 500, that gives you already a good perspective on where to reinvest capital. That's just one kind of metric or one way to look at it. Look at your growth rate. Another one is to just look at things like your lifestyle goals, because investing in the stock market and having an income that provides for your lifestyle from something, say, the S&P 500 versus an income from your solopreneur business is going to have a different lifestyle. Said differently, if you're working every day in your business to get the 25%, you're going to have less time to do other stuff, be with your family, things like that. Versus if you're creating an income stream that provides for your lifestyle and your family from something like the S&P 500, which doesn't involve you having to work every day. It's much more of a passive stream because you're not going to have people relying on you to run the business. You own the business more as a shareholder, but not as the revenue generator. There's less liability in your own business. Someone could have take issue with something you did. There's lawsuits, litigation, things like that. There's risk. There's risk in both sides, but they're different. The stock market risk is more about the fluctuations up and down over time and being able to hold on when it goes down and not getting too exuberant when it goes high and putting it all in one company, for example. So what are the lifestyle goals that you have either now or in the future? Because maybe some people want to work forever and until they're on their deathbed, whenever that may be, continue to create and produce work, which is a noble goal. And other people, it's more, I want to be able to just have work be an option or stop working to be able to coast or spend more time on hobbies or spending time with future grandkids, current grandkids, just kids in general, family. And the goal would be to grow some sort of a nest egg that would create that passive income lifestyle, like a stock market investment. So that's another way to look at it is, what are you trying to create in terms of, your goals? So that would be important to look at. Another thing to look at when trying to consider, okay, is it better to invest in the stock market or invest in your business? Is just seeing how much capital you have in general to put towards either one. So in other words, how much can you save? What's your savings rate? And you could take that as a function of kind of the net profit in your business, how much of your salary and your profit that's coming to you. If you're a solopreneur, you probably have an LLC as an S corp, or you're just a sole proprietor with a doing business as a DBA, maybe an LLC that's a disregarded entity, but it all kind of flows through to your tax return. The income that's flowing through to you as the business owner, whether it's profit and or W-2 salary, how much of that are you able to put away or is margin to utilize towards something? And so this is where maybe it's not an either or question where you don't have to just decide, should I only reinvest in my business? Should I only invest in the stock market and basically use the business as a funnel to go from kind of active, work engagement towards a passive wealth generating vehicle? And for most people, it's probably going to be a little bit of both. And, you can make the argument that just paying for your business expenses in general is, reinvesting into the business. But I guess I'm taking it a step further and saying, okay, if I have, for example, $50,000 in an account, should I look at things that will speed up my growth rate in my business to put that towards, whether it's, more um, uh, staff or, better technology, could be just things that are investing in your own skill set, education, courses, conferences, or, take that 50,000 and put it into, a kind of a portfolio of companies that you own that in the future will pay you um, a stream of income. So, looking at your savings rate and kind of knowing what do you have available to invest. Another thing is more of just maybe the phase of the business, and even the phase of life, um, where if you're in a business phase where you're kind of ramping up and in growth mode, and you're trying to just get the business to like sustainability and to an income stream that provides for your family and that is kind of running on its own to some degree, where you're getting referrals or clients coming in, or you have the contracts in place where people are going to pay you over the next year or two, and you have more certainty in your business. Let's say you're trying to get to that place, maybe that alone dictates whether or not you want to even put money towards other things that would remove your focus. So that's kind of the overall theme in itself, is just where are you looking to focus your money? Are you looking to focus it in creating wealth in your business or outside of your business? And then, of course, there's all sorts of things to talk about when it comes to investing, which is, one of the main ways that I help business owners that hire me as their financial planner is, okay, what's the investment strategy if or when we do choose to allocate things towards a more passive vehicle that creates income in the long run. And even the word passive might be a misnomer, because it still takes, active participation in a strategy that brings about conviction in how you're going to invest. And, by not doing something, in other words, by staying invested, that is an action in itself, because it takes some, discipline and patience to stay the course. And then, of course, we also look at the business and look at your profit and loss and a statement, and how the money is flowing through your business, so that way you can consistently have a rhythm of paying yourself a dividend or a profit that you can then decide, how do you want to reward yourself? Do you want to reward yourself with investing in your business or in the stock market, or completely something completely different? I mean, there's plenty of life to live and fun things to do with family and travel and trips and things like that. So that's, a couple of frameworks or ways to think about what's better. And maybe it's an and both. It probably most of the time is, but it depends on, what phase of life are you in. Maybe you're more in kind of sunset stage where, hey, you've been working hard and you want to just kind of reap the rewards, and maybe even get to the point where you're going to exit, sell the business. And you're much more motivated by creating an income stream that doesn't involve having to ramp the business up. So that would dictate a lot of how you decide whether or not you're going to invest in the stock market or the business. And then, we didn't talk about other stuff like real estate, how much cash to keep around, having a cash reserve, things like that. But this is, a helpful thought experiment, I think, as any business owner, but especially if you're a solopreneur, you have a family, people are relying on you. And maybe we'll put that as the last one, is just thinking in terms of like liability and, protection and, even if your goal is to work long-term, work forever, as long as you can, there could be a possibility that, an illness happens, a calamity, something unexpected, and now, the income stream isn't coming in the same from your work because you have to, deal with a health event. Could be something in your family where you need to take time off. Even something that happens in your business that's outside of your control. AI comes in, technology disrupts things. Those types of catastrophic planning topics will help dictate whether or not or how much you should want to save now or in the future into something outside of the business. In other words, building some sort of a fail-safe or a wealth preservation and income generation vehicle if or when the business goes a direction or your health goes a direction as a solopreneur. So, there's ways to protect outside of the stock market, of course, which would be like getting disability income insurance or life insurance, things like that. But, that is another category to consider when looking at investing in the stock market versus investing in the business. What is the consistency of the growth rate? What kind of lifestyle goal do you have? Where do you want your focus to be? What sort of savings rate are you able to come up with? What are the liabilities that come into play that you want to protect against? And then what phase of your business and your life are you in? All right, that's all for now. Thanks for listening. Take care.
Thank you for listening to today's episode of the Aquila Wealth Podcast. Want more tips on how to be financially stress-free? Sign up for our monthly newsletter and join over 400 subscribers in receiving insights for maximizing your business and personal finances. Go to aquilawealth.com/newsletter or click on the link in the show notes. And tune in next week for a new episode.
Please see the show notes for important disclosures regarding Aquila Wealth Advisors, LLC, and this episode. All communication in this podcast is for information purposes only and should not be considered tax, legal, or investment advice. All information or ideas provided should be discussed with an advisor, accountant, or legal counsel before implementation.